Hi folks, this is Hector Garcia, CPA and small business consultant. This is going to be your Paycheck Protection Program, PPP, loan update, and I'm recording this on May 3rd, 2020. Now, if you have already been funded with PPP or have received an SBA approval number, there's no new information for you in this video. There's tons of questions out there around the forgiveness process. I'm not going to cover that because there isn't any new official information yet. As a matter of fact, I'm actually selling access to a paid webinar I recorded a couple days ago where I went over all the details of the Paycheck Protection Program, and everybody that signed up for that webinar is going to have access to a webinar I'm going to hold somewhere in the end of May, early June, when the official forgiveness information comes out, so I can walk people through how I would approach the forgiveness process. I'll cover more of that at the end of the video. Anyway, let's dig right into the Treasury website and let's talk about the new documents that have been released. So the first thing that you're going to see is the third document on the list, which is called SBA Paycheck Protection Program Report Round 2, 5-3. That's when it was released. So let's open that up. And this was up to May 1st, so up to last Friday. And there's some new important information in here that I think is going to be relevant if you haven't applied or if you're thinking that you're not going to be able to participate because it's too late. Look, there's $175 billion issued in loans for round 2. Remember, round 2 was $310 billion approved for this. So there's plenty of money left. Now, that doesn't mean that if you apply tomorrow, you're guaranteed to get an approval to be able to have access to funds. Those are guaranteed dollars. There might be hundreds of billions of dollars still in the pipeline from current applications in line waiting for the SBA to get approved. However, there's some anecdotal evidence from different reports and different things that I've been seeing online that the SBA is doing something weird with applications where they're not allowing the big banks to just throttle all the applications in one shot, that they're sort of being semi-selective on the applications that are coming in, because there's a new rule that no single bank can lend more than 10% of the total funds of the PPP. Let me scroll down here for a second so we can get a little bit more of context. So this is top PPP lenders for the second round. And notice that they're not telling you what's the name of the bank. Now you can probably infer that JP Morgan Chase, Bank of America, those two big banks are going to be in at least those top 5. But you really can't tell from here which bank is which. These are just, let's call them unnamed banks. But you can see how much money has been approved on each bank and the total PPP authority. So they're trying to prevent any one bank from lending more than $61 billion, which is 10% of the total purse. So what they're trying to do, and again, anecdotal evidence, but it's really obvious when you see the numbers. What they're trying to do is they're trying to get a more diverse group of banks, bring the applications in, and they're trying to, I think at the very end when this program is over, they want to come back and show you the numbers that there was no preference. Like big companies were not having preference and the big banks were not having preference. Therefore, this second round, it's more of a corrective round where all the bad things that happened in the first round of PPP hopefully get a total 180-degree turn here, and they do it much, much different. So when the two things average out, it looks like the program was more fair. Now, the reality is that this is going to be unfair for people that are waiting in line in a big bank and may not even get funding because for whatever reason, way, shape, or form, they're not going to be able to get a loan because there's too many applicants in front of them, or that bank may reach that 10% and they won't be able to have access to the PPP. It's for that reason that I recommend that you're applying in 2, 3, 4, 5 banks. There's no penalty for applying in multiple banks. It's just wasted time for you and the banker potentially. But that's something to think about. So that report is starting to give you some additional information that can really get you to think. Now, this other page here that talks about the loan size. The average loan size is $79,000. $79,000. Let's look at the original report that came out in 4/16, where they reported that the average loan size was $206,000. So the loan size is going to have a direct correlation on the number of employees. And generally speaking, the number of employees also gives you a direct correlation of business size. If you actually take the $79,000 divided by 2.5. Take away 5 to 10% of health benefits and retirement benefits, and then you divide that by the average salary of the average American, which is about 50 grand. This is going to give you an average of about 7 employees per company. So in average, on second round, a small business with 7 employees is the one that got funded versus 206,000, which will in average just basically it will have between 15 and 20 employees per se in average. Right? Of course, there's a lot of companies with tons of employees that have gotten funding, but I think at the end of the day, what the SBA is trying to do is when all the money's gone and everything is done and it's summertime and coronavirus is done, right? We're really hoping that, that this is done, pretty soon, at least all the lockdowns and that stuff, that when they go back and tell the American taxpayers, hey, this is where we spend your money on, the average loan went to a business of about 10 employees. I think that's the target. I think that's what they're trying to get to, right? They don't want the general public or the public relations a nightmare of reports reporting that these small businesses had hundreds or thousands of employees. So that's kind of the trick, is that at the end of the day, in average, again, these are just averages, the average business with 7 to 20 employees is the one that gets funded. And that makes sense because in my line of work as a small business accountant, most of my clients are in that sub 20 employee range. So that should give you some idea more or less of what's going on the same report, which I'll put the links in the description below. You can also see by state who's getting the most funding. Naturally, California, the biggest state in the United States, has the most money with $33 billion. And then you got the other big states like Florida, my state, which has $12 billion. And then we have, which other one's big one right here, New York, $17 billion. And then we got Illinois, almost $7 billion, $6.5 billion. And where's Texas? There you go, $12 billion for Texas. So I think this is also following proportionally where the small businesses are and where the employees are. So this is pretty interesting information, I think. Now, the last piece in this particular report that's worth looking at is the size of the banks that are lending the money. Check this out. Banks under $1 billion in assets, have lent $55 billion, which is about 32% of the amount. So banks under $10 billion in assets, and just so you know, assets in the bank world is how much they have in loans. So in the bank, accounting is sort of the opposite of a small business. The deposits from their clients' checking accounts is their liabilities, and their loans, the money they lent out to their to the bank clients, those are the assets. So under $10 billion in assets, that's what it means. They have lent out, or they have the most amount of outstanding loans of $10 billion. That's $55 billion. Now, the CARES Act specifically earmarked $60 billion just for them. Now, I don't know if they're limited to $60 billion or that $60 billion is guaranteed for them and they can have access to more. If that's the case, there's only $5 billion left for that sub $10 billion bank class. Now, they have this sort of mid-size regional banks that are 10 to 50 billion. Those have lent $27 billion. And then we have the larger banks, right? All the BOAs, the Wells Fargos, the Citibank, those have lent $92 billion, which makes sense, right? Because the most amount of clients are in the big banks. But this is a really interesting one. Banks with under $1 billion in assets. These would be tiny banks. This would be, in some cases, not even banks, like FinTechs that came out a couple of years ago that don't have more than $1 billion lent out. So these little tiny banks are lending $27 billion. Now, usually these small banks don't do really big loan sizes. I mean, they're just not equipped for that, or they don't take that much risk. So the vast majority of the smaller loan amounts that are contributing to bringing the average loan amount down are probably coming from the small banks. So what does that mean to you? That means if you have not applied yet and you're thinking about putting your application in a big bank, I would say go with a small bank. Not just one, a couple. You also have the FinTechs, the financial tech companies like Bluevine and Cabbage and Intuit that historically have not had a lot of loans lent out, and they're probably in this sub $10 billion range, you probably have much more probability of getting money with them. I want to report two specific lenders that I've been working with in the last week or so that I've been impressed by how well they have worked. One is Lendio, which is actually not a lender. They actually find you the bank. I was talking to a rep over there. I kind of became acquainted with one of the reps, and every single loan I sent them, like they literally went out and searched for a bank somewhere in America that would take that type of loan or had the appetite for that loan based on where the client was located, the loan size, etc. So that's actually a pretty cool system. I thought at first that going to a loan broker would not be as good, but they've proven otherwise. They're not sponsoring this video or anything like that. I just like to give a shout out to the person that actually helped me get secure loans for a couple of my clients. So I'll put the links below if you want to contact Lendio directly. The other one that I've been really impressed with is Bluevine. Bluevine is a FinTech. It's an online lender, and the speed in which they're approving or declining loans is huge. Now, I've seen a lot of declines from Bluevine, which I don't mind, right? But I prefer to have an immediate answer than just be waiting to see what they're going to say. So Bluevine has been so far the one that's fastest to arrive to an answer. So that's actually something good to report. Something else I want to report is here on their website, on their Treasury website, there's a new guidance called Guidance on Whole Loan Sales for PPP Loans. Let's see what that looks like. This is for lenders. It shouldn't matter to the average person, but this is interesting nonetheless. This came out May 1st. So this says, lenders participating in PPP may sell their interest in a PPP loan to other participating lenders according to blah, blah, blah. So what does that mean? That means that a lender or a bank that lend you the PPP money can actually sell the loan to another bank. Now, is that good? Is that bad? Well, from the purposes of dealing with a different bank that you didn't know even existed later on when it comes to forgiveness or paying back the loan, yeah, that might be something that's partially inconvenient because maybe you didn't want to deal with that bank. You wanted to deal with the bank that originally sold the loan. But this is how mortgages work too. You may get a mortgage with a lender at first, and then they sell your mortgage, and then someone else is servicing the loan. At the end of the day, I don't think it really matters as long as they're responsive, as long as they have a process for forgiveness, as long as they have a simple enough system to pay back the loan if you're going to pay back some of the loan or the whole loan within the 2-year period of the loan. It shouldn't be such a big deal, but just don't be surprised if you see that the bank that gave you the loan is not the bank that ultimately services the loan or makes you pay back. So those are the news, official news that I've seen from the website. I want to answer a couple of questions because I do get this question quite a bit, and for some strange reason, I can't find official information on it. So people are asking me for my opinion. So if I'm a self-employed individual and I get PPP and I'm also under unemployment, should I stop getting my unemployment benefits, or does getting a PPP loan prohibit me or preclude me from getting unemployment benefits? Now, I have not seen any official language that says you cannot get both unemployment and PPP. However, the conservative side of me and the taxpayer side of me and the person that wants to seek fairness says, if you got access to PPP funds, which is meant to replace your income, and you're also getting unemployment, to me, that would be borderline fraud, because for you to get unemployment, you have to certify that you no longer have access to the income or you're no longer receiving the income. So technically speaking, if the bank is giving you PPP money that will be forgiven and is there to replace your historical income, technically you shouldn't get unemployment benefits. So that would be my official answer, is that you should not. But people challenge me and say, tell me where it says it. I'm like, dude, there's certain things in life that you don't have to see somewhere where it says it or it reads it. Sometimes you either apply common sense or just apply simple ethics. If you get government money to replace your income through the PPP program, which doesn't talk to the unemployment program at your state, therefore there's no mechanical way for them to stop it. Just because they can issue you the money doesn't mean that it's the right thing to do. So that I will leave it up to your conscience, assuming that you are getting PPP money and unemployment at the same time. But those are my official thoughts about it. Anyway, if you have not apply for a PPP loan yet, you're still sort of confused about it, you can log into my website. I'll put a link below, and you can purchase access to about a 3-hour webinar I recorded a couple days ago where I explained based on every single entity type, self-employed, partnership, C Corp, S Corp, employees, no employees, exactly how to go about applying for a PPP loan. So if you have not done it yet and you're frozen because you don't know what to do, you don't know how to do it, then you can log in and purchase my webinar. It's already been recorded. When you go into the website, the link it's on the description. Just click on where it says enroll course and make sure you use the coupon code. Again, it'll be in the description, Hector YouTube. That way it's a flat $100 fee. Now, if you already got funded, you don't need to do this. If you have learned how to put your application together, which is a really simple process, you don't need to do this. This is only for the people that don't know how to put it together, can't find the information, and kind of want to be walked through step by step. I answer a lot of questions in that webinar. Also contains a tutorial on how to fill out a Schedule C form, how to read the form, and what information from that form is pertinent for the purposes of the PPP loan. Don't forget that if you're a self-employed individual, you must have a 2019 Schedule C form ready for you to be able to apply. The 2018 doesn't work. And if you're on extension for 2019, you still need to fill out a Schedule C 2019 that will look like the real one that you will fill out in order to be able to apply for the PPP loan if you're a self-employed individual. And as an additional, let's call it bonus, I'm going to do a follow-up webinar that I'm also going to charge for about the forgiveness process. And that one's going to be somewhere between May and June. There's no official date. I'm actually waiting for the IRS or the SBA or Treasury or whomever is going to show us exactly what the forgiveness process looks like and officially whether or not this forgiveness is taxable or not, and how to deal with the bookkeeping aspect and the accounting aspect and the tax aspect of the whole forgiveness process. So I'm going to have that follow-up webinar that anybody that signs up to this one will automatically be enrolled for that one. There's no official date, somewhere between May and June once the official stuff comes out. So something also worth mentioning, Intuit QuickBooks is holding a town hall. I think it's sort of a webinar style town hall with two senators, Marco Rubio and Ben Cardin, about this whole concept of business, small business relief during COVID-19 crisis, which I assume it's going to cover PPP loans. And this is going to be May 6, 10:30 a.m. Eastern. That might be interesting. I'm definitely going to attend it. I'm just curious to see what they're going to cover. I hope it's not all politics, but it'll be interesting to see if any new interesting information comes out. And, I really appreciate companies like Intuit QuickBooks getting involved in the small business world and trying to keep us abreast of all these things that are happening. So I'll put a link to that webinar as well. It's free. And you just register, and I assume that you get a link to join it. So I'll put that in the description below as well. So that's it. So hopefully the PPP updates were useful for you. And again, if I'll see you on that May, June webinar about forgiveness, if you sign up for this paid course, we can cover that in detail too. I will do a short YouTube video on forgiveness no matter what. So once that information comes out, I will do it regardless, just because I want to keep everybody informed. But any details around how to fill out the forms, how to do the bookkeeping, payroll summary reports, and all those details around presenting forgiveness to, hopefully with the information I'll give you, we'll have a higher probability of getting forgiven. That's when accessing the webinar might be a useful thing. Anyway, thank you very much, and I'll see you everybody on the next one. Stay safe.